All right, let's get straight to it then. And B2B banking tech startup Gravity, they've raised about $1 million in a funding round that's led by early stage venture fund Kettleborough VC. We've got Satish Krishnaswamy, who is the founder and CEO at Gravity, here to talk a little bit more about this fundraise. Thanks so much for taking time out. I just want to understand a little bit more about what exactly it is in terms of the business and industry that Gravity operates in.
Yeah, thank you so much for covering us. So we are predominantly focused on banking industry, and banking industry worldwide remains the same. Gravity is a hyper-personalization platform. I will quickly, in under 2 minutes, help you understand what do we mean by hyper-personalization. There are three ways to understand hyper-personalization. One by a technical definition. So hyper-personalization is a contextual curation of products and services as at scale and at speed. So if HDFC Bank has got 120 million customers, can HDFC Bank differently curate products and services for each one of these customers? That's solving for the scale problem. And can they do it almost near real time? That's solving for the speed problem. That's one way to understand hyper-personalization. The second way to understand hyper-personalization is banking industry worldwide has been spending billions of dollars on automation. Now, what this has resulted in an increased efficiency at the operational level and the process efficiency level for the banks. And for the consumers, what this has resulted in a reduced delivery cycles for their products and services. It's good for the consumers. But what needs to be understood here is consumers need much more than that. So think of it as Netflix delivering a world-class movie experience. The rendering is world-class. The peripherals around the content are world-class. The UI UX is world-class. But what if Netflix tells you these are the catalog of 10 movies that you can watch for the next 2 decades? So that's not going to help. So content is very important. And with respect to banks, the content are the products and the services. So we're helping the banks come up with the latest contextual catalog of products. That's the second way of understanding hyper-personalization. Of understanding hyper-personalization is the most profitable banks worldwide, even in India, are the most hated banks. Now, that's not fair on the part of the banks, but that is how technology has evolved over a period of time. So banks are limited by the limitations of the underlying technology. The underlying factor for this, as per various research that was done, is the three primary reasons for this, for the consumers not being happy. One is ignorance, wherein the way the products are structured, the financial structuring of the products, whether it is commission, whether it is interest, whether these are service charges and all, very difficult for the consumers to understand how these are structured. Now, these needs to be simplified. That's on the ignorance piece. So not many customers actually understand how products and services are curated. Second, on the vulnerability piece. Now, if I have to avail for a loan and go to a bank will tell me they can offer this kind of a loan for a tenure of 6 months for the specified rate of interest. Can the consumer demand that I don't need it for 6 months, I need it only for 6 weeks or 6 days? Those kind of feature functionality, this is not available. So the consumer ends up taking in more amount of loan servicing for a longer period of time, which is not good for the consumer point of view. And third is an inertia. Now, this is not a consumer inertia, but it is how the banking tech has evolved over a period of time. If I'm not happy with my principal banker, can I switch to some other bank within a fraction of a second or within a day's time with all my products and services staying uninterrupted? That's sadly not happening today because of how the banking tech has evolved over a period of time. So we're helping banks change all of these and unleash an era of hyper-personalization at scale, at speed once again.
So what exactly will the funds be used toward?
Yes, so we've raised close to $1 million. These are predominantly from industry leaders, HNIs, and one institutional investor, which is Kettleborough. The deployment is predominantly on product engineering, while Gravity promises to leverage the best of the underlying tech with respect to AI, deep tech, machine learning, all of those. Version 1 of Gravity modestly leverages AI, but all the future versions of Gravity will be very high on AI. We look at it as an innovation stack, wherein if hyper-personalization has to be a reality today, it's more of an imagination than more of an availability of tech. So all the underlying tech today, which can make hyper-personalization a reality, is available today. We are helping banks exploit that with Gravity as a platform.
And what is the concept of banking 2.0? How do you think Indian startups are really addressing this issue? Are there larger banks, larger financial institutions as well that are also increasing their tech spends, according to you?
Yes, so definitely yes. So on an average, the industry spends 5% of their revenue on tech and automation. So if we talk about Indian banking industry, last financial year, overall, the industry clocked roughly around $250 billion of revenue. So 5% of that, roughly 13 billion of dollar on automation. So the spending amount and the quantum that is getting spent is good enough. What this has ensured over the last 1 decade is towards building in efficiency, automation, digitization. But now the next wave of automation has to be very focused and bringing in about a foundational change in how banking is done and how tech is getting deployed, which essentially means we cannot be spending on more of the same. That's one part of the to answer your question. The second piece is, as far as fintechs are concerned, you have B2C, you have B2B, we are B2B. Essentially, we are B2B to C, so we are helping the banks through our platform serve their end consumers. What will happen is banks would not want more of the same, which is better version of some underlying tech of theirs. They would need something which can change the paradigm of how consumers consume banking.
Right, and Satish, let's find out what the long-term growth plans are over the next 2 to 3 years. Any more new tie-ups that we can see with banks?
So Gravity will coexist with all of the underlying applications of the bank. So essentially, we don't replace any of the vendors or any of the tech applications of the bank. That's predominantly very interesting in the sense Gravity will be a force multiplier. It will coexist with all of the existing applications of the bank. That's one. For this year, the focus is on Indian banks only. So by this year end, we are hopeful we will have 4 to 5 marquee implementations from reputed banks in the country. So that's for this year. Whilst we implement Gravity in Indian banks, we are hopeful in the next 1 to 2 quarters we should tie up with partners in the overseas region. So probably for the next year, UAE, VIP as a region, UK as a region might be of interest as far as Gayatri is concerned. So we are reaching out to partners out there, and we are in the process of signing MOUs with multiple partners. Banking worldwide remains the same. If you can prove the might of Gravity with respect to the scale that Indian banks handle, regional implementation should be pretty straightforward.